Last year was a bloodbath for the markets, and growth stocks took one heck of a beating. The only investors who made meaningful profits were those who were bold enough to aggressively short tech. Now, Tesla was the most profitable short of them all, with investors reportedly raking in over $14 billion by betting against the EV maker. This has left everyone wondering what 2023 has in store for Tesla. Today, I'm going to give you a bit of background about Tesla, tell you why its stock has been crashing over the last year, and why the next 12 months could bring about a recovery rally unlike any other. Okay, I'll start by saying that nothing in this video is financial advice. I'll also caution that I am by no means an expert on Tesla or tech stocks in general. In fact, I'm pretty sure this is my first in-depth public company analysis. As such, take everything I say with a grain of salt and make sure you do your own research. That said, Tesla was founded in 2003 by Martin Eberhard and Mark Tarpenning. The company takes its name from Nikola Tesla, the Serbian-born inventor whose creations were crucial to humanity's harnessing of electricity. Back when Tesla began, it was called Tesla Motors, and it was essentially nothing more than a shell company. This is according to Elon Musk, who needs no introduction. Elon invested $6.5 million in Tesla in early 2004, less than a year after it was founded. Elon's investment made him the largest shareholder in the company, and he became CEO in 2008. Elon is also technically a co-founder due to a lawsuit settlement. Now, Tesla has raised more than $20 billion since its founding. Investors include a who's who of Wall Street and Chinese firms such as the Industrial and Commercial Bank of China. As a fun fact, the Industrial and Commercial Bank of China has the most assets under management of any bank in the world, with over 5.5 trillion USD. Anyhow, the initial public offering for Tesla stock took place way back in 2010, and as you can see, it's been a wild ride ever since. Anyone who bought the bottom and sold the top in November 2021 made a whopping 350x return on investment or more. And Elon seems to be one of these lucky people. More about that later. Now, as some of you will know, Tesla actually wasn't a profitable company until fairly recently. Its first car was called the Roadster, and only 2,500 were sold, despite government subsidies and incentives on electric vehicles in many countries. Tesla's Model S and Model X likewise got off to slow starts. And yes, Tesla's range of Models S, 3, X and Y spell sexy, sort of. And well, you've got to love that, haven't you? Anyway, it wasn't until 2020 that Tesla saw its first year of profit, something that was probably facilitated by all the pandemic stimulus around the world. It's probable that the pandemic restrictions also contributed because it meant that most people could only spend their money on goods, hence the rally in auto sales. Now, contrary to popular belief, not all Tesla cars are made in China. Tesla actually has 4 so-called gigafactories. The first is Tesla's iconic Fremont factory in California, which was opened in 2010. The second gigafactory is in Shanghai, China, which only opened in 2019. Remember this second date. The third gigafactory is in Austin, Texas, and it was announced in early 2020 after pandemic restrictions prevented the Fremont factory from operating. Tesla subsequently moved its headquarters from California to Texas in 2021. The Texas Gigafactory opened early last year. Now, the fourth Tesla Gigafactory is located in Berlin, Germany, and it likewise opened last year. Now, before the Tesla fanboys freak out, I know that Tesla has additional gigafactories in the United States and elsewhere, but these are focused on producing electric batteries and car parts, not the cars themselves. Anyways, Tesla's last quarterly earnings report was released in September 2022. It revealed that the car maker had made over $21 billion in Q3 last year, with almost $5.4 billion in profit. This brought Tesla's yearly earnings to a staggering $75 billion, with almost $20 billion as profit. Tesla's quarterly report for Q4 2022 isn't due until later this month, but it's already been confirmed that a record number of Tesla cars were sold last year. Over 1.3 million Teslas were sold in 2022 compared to 930,000 in 2021. That's a 40% increase in car sales, which is truly incredible growth. And yet, Tesla's stock has continued to slide. This is for many reasons, and the first is supply. Although Tesla sold over 1.3 million cars last year, its gigafactories produced almost 1.4 million cars during the same period. As basic economics dictates, an increase in supply tends to cause prices to drop. This, of course, assumes that demand stays the same or increases. In Tesla's case, investors are concerned that demand for its cutting-edge EVs has been dropping. Now, this is in large part due to the upcoming recession we're likely to see, a recession Elon himself has said could last until early 2024. Speaking of which, the second reason for the drop in demand is the bad press around Elon's acquisition of Twitter. If you watched our video about Elon's Twitter acquisition, you'll know that governments and Wall Street have been aggressively pushing back against his attempts to create a free speech platform. That's why it's no coincidence that the United States, the European Union, and others have been finding every excuse to investigate Tesla. Most of these efforts have been focused on Tesla's controversial self-driving autopilot feature that has resulted in multiple accidents, almost all of which are due to user misuse. As for Wall Street, the S&P 500 kicked Tesla out of its ESG index. This is despite the fact that Tesla's mission is to, quote, accelerate the advent of sustainable transport and electric technology. That's because ESG investors don't truly care about the E. They care about the G, which is code for control. More about the ESG ideology in the description. Moving on. Now, another thing that Wall Street has been doing is relentlessly shorting Tesla stock. To be clear, shorting a stock does not cause it to go down. However, the optics of seeing big names bet against the car maker causes the average investor to follow suit, and Tesla has actually experienced this before. If you watched Elon's TED interview about his Twitter acquisition, you might recall him talking about how Tesla stock was being relentlessly shorted by Wall Street because of a lawsuit by the SEC. Elon claimed that he was pressured by Wall Street into settling with the SEC, and it's why he hates them both. For context, the SEC sued Elon in 2018 for claiming on Twitter that he could take Tesla private at a price of $420 per share and that the funding for this had been secured. Elon contends that the funding was in fact secured and implied that he was punished by Wall Street for trying to take Tesla private. More about that in a moment. Now, the third reason why Tesla's stock has been struggling ties into the second, and that's competition. Tesla is no longer the only EV show in town, and many existing car companies have shifted their focus to EVs too. In terms of total car sales, Tesla's biggest competitor is a Chinese automaker called BYD Auto. BYD Auto is a subsidiary of BYD, which stands for Build Your Dreams. BYD was founded in 1995 by Wang Chanfu, who has since become China's richest man. Funnily enough, BYD Auto was also founded in 2003. Last year, BYD Auto sold over 1.85 million EVs, an unprecedented 3x increase compared to 2021. This exponential growth makes sense when you consider that China has been buying more EVs than every other country combined since 2016. As you can see, Chinese EV sales exploded during the pandemic, partially for the same reasons I mentioned earlier, easy money being spent on goods. However, BYD's primary advantage is in its price point. In China, most BYD EVs cost less than $30,000, whereas the cheapest Tesla car started at almost $40,000. Tesla recently announced that it had slashed the price of its cheapest car to $33,000, which will impact profit margins. This incredible infographic by Counterpoint Research reveals that BYD Auto flipped Tesla as the largest electric car company in less than a year, specifically between Q2 2021 and Q2 2022. BYD Auto has been outselling Tesla ever since, and it's expected BYD's Q4 earnings will show a continuation of this trend. Before any BYD bulls get too excited, I should caution that EV sales in China could fall because of the country's reopening. Keep in mind, most of China has been in lockdown since early 2020. That's almost 3 years of pent-up demand for services like tourism, which people will likely now want to spend their money on. On that note, BYD was reportedly unaffected by China's zero-COVID policy. By contrast, Tesla was greatly affected and was experiencing issues as recently as December. When I saw this, my first thought was that it might be down to differences in restrictions. BYD's factory is in Shenzhen, whereas Tesla's is in Shanghai. After doing some digging, however, it looks like BYD may have received preferential treatment from the Chinese Communist Party. This makes sense, given that large Chinese companies are assumed to be indirectly controlled by the CCP, and there appears to be a history of this kind of preferential treatment. BYD also had a more practical advantage, and that's that both its supply chains and its main customer base were within the same country. This meant that pandemic restrictions had a minimal effect on production and distribution. This is the official reason why BYD outperformed Tesla, but I don't buy it. It's even possible that BYD managed to gain access to sensitive information about Tesla's manufacturing process with the help of the CCP and others. The CCP is known for stealing such sensitive info, and it would have been very easy to do given that the Shanghai Gigafactory opened in 2019. Just my speculation, though. Now, here is where things get interesting. Believe it or not, but the biggest shareholder in BYD's parent company is none other than Berkshire Hathaway, the famous investment firm headed by Warren Buffett. Berkshire Hathaway recently sold 25% of its BYD stake, but still holds around 15% of its total shares. The fact that many mainstream media outlets have been boasting about Berkshire's BYD outperforming Tesla ever since Elon announced his Twitter acquisition suggests the two factors are related. After all, Elon funded his Twitter acquisition with his Tesla stake. Crushing Tesla would therefore kill Elon's Twitter. This ties in to the fourth reason why Tesla stock has been in a downtrend, and that's all the sell pressure that's been coming from Elon and others. Elon's most infamous Tesla sale took place in early November 2021 when he dumped $6.9 billion worth of shares. It's believed that this was the primary cause of the 15% crash that week. Now, Elon is a lucky guy because this sale took place within days of Tesla's top. It looks like Elon's brother was even luckier because he sold $100 million of Tesla stock right at the top. This was one day before Elon published a Twitter poll asking if he should sell Tesla stock, which resulted in the subsequent sale. Just a few weeks later, Fed Chairman Jerome Powell announced that inflation was no longer transitory. Markets have been tumbling ever since due to a combination of more expensive debts and the expectation of lower future earnings due to higher interest rates, which began increasing last March. This valuation reset has hit Tesla particularly hard. Now, this is not surprising given that Tesla's price-to-earnings, or PE ratio, peaked at over 1,400 in 2021 and was in the hundreds until last September. In plain English, Tesla stock was extremely, and I mean extremely, overvalued relative to its earnings, and some would say it still is. To put things into perspective, Elon has reportedly sold over $40 billion of Tesla stock since November 2021. That's around double the profits Tesla made during the same period. It's also a figure not far off from the $44 billion that Elon paid for Twitter in October when the deal closed. The thing is that Elon didn't put up all the money for Twitter. If I understand correctly, he only put up $33 billion and not all of it was cash. This begs the obvious question of what Elon spent the rest of the money on, especially because his only possession is his private jet. He apparently doesn't own anything else. The answer is as obvious as the question if you listen to Elon instead of reading the headlines. In another TED interview, he explained that philanthropy, that is, donating money, is very difficult to do effectively. That's why Elon's approach is to invest in creating new companies that solve real-world problems. In case you missed the memo, Elon isn't just the CEO of Tesla or the owner of Twitter. Elon is also the CEO of SpaceX, the creator of The Boring Company, and co-founder of OpenAI and the founder of Neuralink. For anyone wondering, Elon's initial wealth came from his being a co-founder of PayPal. His initial $6.5 million investment in Tesla actually came from his $100 million stake in PayPal, and it underscores his history of using funds from current and previous companies to create new ones. Note that SpaceX recently hit a valuation of $137 billion, and OpenAI also recently hit a valuation of $29 billion. This suggests that Elon's record net worth loss of $200 billion is likely to be short-lived, and that he could soon regain the title of richest person on the planet. More importantly, it means that he should have the capital he needs to continue expanding and improving his current and future companies. Now, this brings me to the reason why Tesla could eventually see a strong recovery rally, and the short of it is that Tesla is not a car company. As Elon and other executives have repeatedly stated, Tesla is a tech company, and not just any tech company either. Tesla is arguably the largest publicly traded AI company. That's because the thing that makes Tesla cars different from the other EVs is its aforementioned autopilot feature. As Elon has mentioned in many interviews, perfecting Tesla's autopilot feature requires solving real-world AI. And once you solve real-world AI, the logical thing is to build a robot. Say, did you know that Tesla presented its Optimus robot last September? Probably nothing. In all seriousness, the significance of this cannot be understated, and the case for Tesla becomes unbearably bullish when you realize how Elon's other companies fit into this equation. For starters, there's OpenAI, which is literally building AI and is on the brink of real-world AI with stuff like ChatGPT. Then there's The Boring Company, whose purpose is to create transport infrastructure specifically for Tesla vehicles. SpaceX's role becomes immediately apparent when you remember that the company is behind the Starlink internet service. Elon confirmed last year that Starlink will soon support Tesla cars. Now, Neuralink is where things get a little crazy. Elon claims that one of his motivations for creating Neuralink is to ensure that the AI made by Tesla and others doesn't become anti-human. In practical terms, this means interfacing and integrating with AI through microchips implanted in your brain. Yikes. If that wasn't crazy enough, Elon believes it's inevitable that adversarial AI systems will be created, and they will target people with Neuralink implants. That's why Elon is working on creating what are basically AI self-defense systems, which will protect you against, say, the AI being developed by Google, for instance. This relates to another important point, and that is that Elon is hyper-aware that whoever develops AI first will have a potentially undefeatable first-mover advantage. This is why he is so hyper-focused on AI and why he's been directly and indirectly pouring so much time and money into this particular niche. From where I'm standing, it looks like Tesla is on track to be this first mover in the AI space, thanks to its close relationship to Elon's other companies. If I'm correct, then Tesla may become the most valuable company in the world by the end of the decade. But it's not all sunshine and rainbows. As much as Elon loves to talk about his love of humanity, there are real concerns to be had about a single person controlling what could eventually be the world's entire physical and digital infrastructure. Even if Elon ends up being good, whoever takes over his empire when he passes may not be. For what it's worth, I happen to think that Elon has been walking the walk. In other words, I think he truly does love humanity and wants to improve it. He has managed to piss off all the right people, and it sounds like he wishes he'd never gotten involved with them in the first place by taking Tesla public. To be fair, it could all be for show, and Elon also has a track record of being a showman. At the same time, I'm highly suspicious of his aversion to nuclear power and his focus on solar, wind, and energy storage. Most panels, turbines, and batteries are made in China. Recall that he received lots of Chinese money. Still, I can't shake my gut feeling that the guy is genuine, at least about his stuff relating to his love for humanity. He's the only billionaire that talks about abundance, not scarcity. He's the only billionaire concerned about population collapse. He's also the only billionaire that isn't trying to live forever. If you're wondering why, that's because he believes that people need to die for new ideas to come about so that society can continue to evolve. He pointed to the dinosaur politicians as proof of what happens when old ideas aren't allowed to replace new ones, and I must say, this insight has been rattling around in my brain ever since I heard it. All I can say is that every time Elon talks, I find myself agreeing with most of what he says, and he's been consistent in his views across all his interviews. Every time, I'm amazed by how obsessed he is with ensuring humanity survives, and how optimistic he is about the future of our species and the planet. And so, I'll leave you with this clip.
There's a whole generation coming through who seem really sad about the future. What would you say to them?
Well, I think if you want the future to be good, you must make it so. Take action to make it good, and it will be.
I couldn't have said it better myself.